Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. And we do have a few interesting movements on the market right now. So let me tell you about everything. But we have to start with the fundamentals, right? I have to tell you what's going on the markets from the fundamental point of view. We need to take a look on the calendar. It's you have to do that all before trading. It's very important that you know what is in the macro calendar before opening any position. So let me switch to the macro calendar. This is the calendar for today, and you can see that overnight we had industrial production and retail sales from China, which came slightly worse than expectations. But I think that the most important number today was GDP from Germany for the third quarter, which came much better than expectations. As you can see, 0.6 was expected, then we got 0.8. Well, we got a pack of data from British pound, from UK, for British pound. You can see red colors here, and CPI was a little bit lower. Well, it's still high, right? It's still 3%, but it was lower than expectations, and most of the data was lower than expectations. Retail sales still very high, right? 4%, but lower than 4.1. Well, that's kind of weird because this is very strong data, but it's worse than expectations. That's why British pound is a little bit weaker right now. Apart from that, what we had is GDP from Eurozone, which still was very high but came in line with expectations, and all that together, like industrial production from Eurozone and better GDP from Germany, and no negative surprises, created a positive sentiment for euro, and euro now is climbing significantly higher, actually on many instruments, triggering a buy signal. Still to come, we will have a speech from Fed's Bullard. We will have inflation, PPI inflation from US, and that would be it for today. So most of the important events are already behind us, and the situation looks as follows, and we will go to the charts right now. First, we'll start with euro dollar, because you can see that euro dollar climbed vastly higher, and that's an interesting situation because and these are my positions I had recently, short positions. Both of them were on profit. Actually, this one was on break-even point and this one was on profit. As you can see, that's good. That's what I do. I always, when I have profit, so I sold here, I had profit here, here. I moved stop loss from this area. I moved on a break-even point. It's for me, when the price reverses, I close the position on break-even point or on small profit, because I don't want to close position on loss. Well, I don't mind losses, but once I get a decent profit, I don't want those positions to turn into a loss. And as you can see, that was a great decision, because the price reversed. If I didn't move stop loss on break-even point, I would get full stop loss right now. But let me come back to the situation here, not about trading. What we do have here is a left shoulder head and a right shoulder. Then we got end of the right shoulder and a breakout of the neckline. Here the price went significantly lower, created a flag, tested the neckline, and broke the lower line of the flag, and that was a legitimate sell signal. But the thing is that price stopped. Instead of going lower, even instead of testing the lower line of the flag formation, the price reversed and denied the sell signal today because the price came back above the neckline, which denies the sell signal from this head and shoulder formation. In addition to that, what we have here is a flag. Those blue lines are from the flag formation. So we have an upswing, flag. Flag is a trend continuation pattern. Head and shoulders are trend reversal patterns. Is a trend reversal pattern, but it was denied. So what we left here is we are left with a flag here, and a breakout of the comeback here cancels the sell signal, but breakout of the upper line of the flag will trigger a buy signal. Once the price will get there, that will be a buy signal. So far we are on a horizontal resistance here, created by a combination of two factors. So we have a combination of upper line of the flag and also the supports from the second half of the October. It would be very nice from the technical point of view if the price bounced here, test the neckline, but this time as a support, here, bounce from the support, break the upper line of the flag, break the horizontal resistance, and once the price will be there, that will be a major buy signal with a great risk to reward ratio. Because price here, the stop loss somewhere here, 70 pips, and potential target is 350 pips. So potential profit is 5 times as big as potential loss, which makes this situation excellent in terms of the risk to reward ratio. So to sum up, on euro dollar, the sell signal from the head and shoulder is denied, but there is no buy signal here yet. Buy signal will be created once we'll break the upper line of the flag. On euro dollar, we don't have buy signal, but we do have buy signal on euro to British pound. So here we do have a combination of two factors. First of all, we do have a bullish situation on euro, but also a negative situation on British pound. Here, from the technical point of view, we got bounce from the horizontal resistance, horizontal support here. So that was a strong support. The price tested it recently. The price was testing that from June. Last time here it resulted with an upswing, but there was no buy signal here yet because the price was still below the downtrend line, the red one. But with this bounce, we broke the downtrend line and we came back above the uptrend line. This black line, as you can see, is a long-term uptrend line. Okay, which this comeback above this down uptrend line is a positive sign. So we bounced from here, broke downtrend line, came back above the uptrend line, and that altogether is a buy signal. That's why we put this arrow up on this chart in the last week, and that's what's happening. We do have a buy signal. The first potential target for this movement is here, 0.9030, 0.9020. So from now it's like 70 pips. There is an excellent situation on New Zealand to Singapore, New Zealand dollar to Singaporean dollar, and I'm extra happy with that because that's an exotic instrument. Not many analysts, experts are talking about this, but we were talking about this last week, and it resulted with a beautiful technical situation, beautiful technical bearish pattern. The price went significantly lower and broke ultra important horizontal support. Why is it ultra important? Because it was a resistance here. After the breakout, it was a support. Then, as you know, very often broken resistances are tested as supports, and broken supports are tested as a resistance. This broken support was tested as a resistance a few days after the breakout. So we got a breakout. We tested that once, twice, three times. That upswing was a wedge. Those green lines they belong to wedge formation, and wedge is a trend continuation pattern. So trend was bearish, as you can see here. The price went in lower lows and lower highs. That resulted with a bearish formation and a bounce from the resistance. So all that together gave us a sell signal. And for the past 1, 2, 3, 4 trading days, the price is declining, the price making lower lows and lower highs. Sentiment stays negative here. Let me tell you a little bit about the potential target for this movement. Because the potential target for this movement is exactly here, 0.9130. So the potential target for this movement is still 210 pips lower, which also makes it a great trading opportunity. Gold. The situation on gold is not very good for the buyers. Why is that? Because as you can see, dollar is having troubles. Usually when dollar is weaker, gold is stronger. But with dollar problems, gold is having problems as well. So that's purely lack of the demand. There was a demand here, and we spotted that and we expected that because the price met a combination of supports. Price even broke horizontal resistance here, and I thought that this upswing will continue, but as you can see, it got denied. And that's just a false breakout here. So we'll just leave this support here. Currently, I don't want to trade on gold because I don't see any proper trading signal. Like for me, the situation now is kind of mixed. I don't see the proper trading signal here yet. And when I'm in such a situation that I don't see a proper trading signal, I'm just avoiding this instrument. American dollar to Mexican peso, that was interesting. And it's happening all the time, so I will tell you about that. As you can see, we do have a symmetric triangle here, right? And usually when you have a symmetric triangle, you have a breakout of the upper line or the lower line, and it should trigger a buy or sell signal. But the thing is that very often with triangles, right after the upper line or the lower line, you have a horizontal supports and resistances. So right after the breakout of the upper line, right above the upper line of the triangle, you do have a horizontal support. It's also this one, right? So it's a very strong one. But in case of a support, also right below the lower line of this symmetric triangle, you have a support here. And only the breakout of the upper line of the triangle should not trigger a buy signal. You should wait for the breakout of the horizontal resistance. That's why we put that arrow last week, and you remember that. We did not put the arrow here because breakout of the upper line of the triangle is not significant enough. What you should wait is the breakout of the horizontal resistance here. What you should wait is the price getting there, closing a day there, and that would be a legitimate buy signal. The same goes with the sell signal. Only the breakout of the green line does not open you selling, that does not give you right to sell. Well, you have a right to sell anytime you want, but from the technical point of view. Here, from the technical point of view, you should wait for the breakout of the horizontal resistance as well. So that breakout does not change much here. That breakout, that possible breakout here will change a lot, but we don't know yet if it will happen. American dollar to Swiss franc. What we had there was this sideways trend, also symmetric triangle, and also a breakout of the lower line of the triangle does not trigger sell signal, but the breakout of the horizontal support, which is actually, well, the situation here is not so clear, is a bit choppy. That's a choppy trading. So what we do have here, I would say we do have a sell signal here, because we broke the lower line of the triangle, we broke this horizontal support, then the price created a wedge formation, that's a wedge, and broke the lower line of the wedge, and when they will break this orange support, nothing should stop them from reaching this horizontal support. So I would say that we do have a 60 pips bearish occasion here. American dollar to Japanese yen, that was a good one, because, well, first of all, on a daily chart, look at that. Price had a chance to break this resistance last Monday, but went higher, made new highs, new long-term highs. Actually, we are on the highest levels here since March, since the middle of the March. But then the price got rejected and the price draw a shooting star candlestick on a daily chart. That's negative, that's very negative. So the price went lower. But, yes, okay, let me do it like that. The price went lower and met first horizontal support here, this green one. And made a bounce. And the thing is that the price also made correction equality patterns, so this correction is the same as this one. And this correction was also shaped like a flag, which is kind of typical. So we had three bullish factors here. Horizontal support, lower line of the flag, and a correction equality pattern. So after that the price bounced, went higher, we made new midterm highs, and now the price is declining. There is no like a strong buy signal here. I would say that this movement after the breakout should be much stronger. So for a proper signal, there was a signal here and here and here, but now there is none. I would wait for the signal price making new highs. That would be a buy signal. And price breaking this green area would be a sell signal. Silver, not in the best shape, but still trying to defend this $16.85 per ounce support, which is ultra important for the situation on silver. But as you can see, the sideways trend continues. Australian dollar to American dollar, that's an interesting one, because the price actually had a sell signal yesterday, but they do not want to go down too much. Why sell signal? Because we had the sideways trend and we broke the lower line of the sideways trend. We went lower and now that was a support, and now as you can see we are testing this support as a resistance. According to the price action laws and rules, we should see a downswing, but we will see if it will happen. A bearish view is also supported by two factors. First of all, it's a head and shoulder pattern, so a left shoulder, head and right shoulder. And second thing is the breakout of this horizontal support here, and that was an ultra important support since August 2016. For many months that was a resistance. It got broken, it got support here, it got broken. So now the price is below the resistance here, so the sentiment should be negative. I have one problem with that, because usually it should look a bit different. So after the breakout of the horizontal support, we should get like a strong directional movement aiming 80 pips higher. But the price is pretty resistant to the further downswing. So now, although on the paper it looks bearish, but I don't like the most recent price action here. Like there is no waterfall, there is no sharp decline, which actually makes me a bit suspicious about this. Now American dollar to Canadian dollar. They had this sideways trend on a trend line, this rectangle, and they performed a bounce. I don't see anything like super interesting apart from this flag. But the thing with this flag is it looks nice on an hourly chart. On the H4 chart, it's not the best flag in the world. So only the breakout of the upper line of the flag does not convince me. For the buy signal, what I would like to see is the price above the red resistance here, and the sell signal will be triggered once we will deny this breakout and break the trend line. So here we have to wait for a proper trading signal. Oil is doing what we expected, so is trying to correct the recent movement. When did we place that arrow? Here, 8th of November. We were expecting the price to decline, and the price is declining. Possibly the price will test the gray area soon. S&P 500, after performing this V-shaped reversal, is having a sideways trend, pretty uneventful trading on S&P 500. Definitely trading on DAX looks better because the movements are more volatile. As you can see here, DAX broke the uptrend line and aimed the horizontal support here. Also performed a V-shaped reversal, but the thing is that those reversals are good and popular among American traders on American indices. On DAX, I haven't seen many of them. So, that being said, I don't know if they are reliable. And the next one is Bitcoin. Bitcoin over the weekend reversed sharply from almost 8,000 for one Bitcoin. They reversed to like 5,400. Very significant drop. But then the demand showed up. Apparently, Bitcoin is now being bought for investing purposes. So there was a hedge fund which bought a bit of Bitcoins, and now we're having a reversal. I'm wondering if this correction is the same as this one. Let me check. Oh, even bigger than this one from the first half of September. So that was quite a significant drop. So they used this 6,000 for one Bitcoin, and now seems like a good investment because now Bitcoin is for 6,500. Australian dollar to New Zealand dollar, finally a buy signal, breakout of the upper line of the flag, and that's a buy signal. They defended this uptrend line. Okay, if you want to be precise, let's make it like that. This black line is important because on a weekly chart, that's the upper line of the triangle. So if it got defended, and it looks like it, there is a buy signal on Australian dollar to New Zealand dollar. It would be even stronger if we would break this horizontal resistance. But even without that, so far so good, it looks pretty decent. And dollar index. As the head and shoulder on euro dollar was denied, the inverse head and shoulder on dollar index is still alive. And we will test the neckline. So neckline on euro dollar was tested a few times, but neckline on the dollar index was tested kind of once on Friday, but we are about to test it again. Price getting below the neckline should trigger as a sell signal, and we have chances that it will happen because, as you can see, the uptrend line is under the pressure. So let me move this arrow here. Price getting to the arrow will trigger a sell signal on dollar index, so it will trigger negative sentiment towards American dollar. Euro to Japanese yen defended this horizontal support, which is good, and aims the horizontal resistance, but we are in the middle of the sideways trend, so there is no proper trading signal here yet, at least for me, because as you know, I'm a trend follower. I don't trade inside of the sideways trends. Cable is showing us problems with the sentiment towards British pound. We are above the uptrend line still, but the pressure on the uptrend line rises, and we can get the breakout soon, and price getting to the arrow should trigger a sell signal. British pound, Australian dollar, here also kind of a sideways trend with no trading signal. American dollar to Russian ruble broke the downtrend line. We said that triggers a buy signal, especially with this candlestick formation here, so that's a bullish engulfing. So there is a positive sentiment towards American dollar and a negative sentiment for the Russian ruble. And last but not least, you see quite the opposite situation. So Polish zloty is stronger. Well, it's my local currency. We had a chance for an inverse head and shoulder pattern here, left shoulder, head and right shoulder. But it looks more like they will use the scenario of this wedge with those blue lines for the wedge scenario, and the inverse head and shoulder was a bullish scenario, right? So there was we were thinking about breaking of the neckline and a continuation, and a wedge formation is a negative scenario, so it's a trend continuation pattern. So we should aim here for a breakout of the lower line of the wedge, and after that a movement towards the recent lows on 3.51, and apparently using the current knowledge and the current situation, that scenario is more probable on American dollar to Polish zloty. Okay guys, thanks very much. As you can see, some decent trading setups, a lot of trading signals. So this week starts on a front foot. That's good. Hopefully traders will keep the pace, and we will see much more trading signals. But again, we do have few trading signals, which is good. We will see how the situation will develop in the next few days. Thank you very much. If you want more trading occasions and views, visit our Twitter account and our website alpari.news. And now we have a short break, half an hour, and after that a webinar about basics of the Forex market.